How's it going, everyone? Welcome to the video where I will be explaining my strategy. I know I said I'm gonna post on the weekend, but for some reason I'll be honest, I couldn't be bothered to record. I'm not even gonna make any excuses. But yeah, this strategy is basically what I was using when I used to trade GBP JPY back in like my first videos. But I'm back to it and I've transformed it into a lower time frame and I've just changed it up a bit. But yeah, it's TJR strategy that he shows in the trading transformation. But why is my trading views keeps freezing? Let me try reset. Yeah, it should be fine. And yeah, this wasn't a trade that I took today. I didn't take a trade today. If I would have took one here, which that's probably what I'm gonna show as the first example of today. Because why not? I might as well. It wouldn't have necessarily been the best trade, but it still shows the strategy in action, basically. So yeah, let's get into it. So how am I gonna do this though? I've never really like taught anyone anything. I could write it down. Yeah, you know what? Let's do that. Alright. So, how am I gonna? How the fuck do you do this shit? TJR does it, bro. Oh, there it is. Text. Alright. So 1. Determine bias. How do we do this? We look at the 1 hour and the 15-minute trend. 2. If the 1 hour and the 15-minute trends are the same, we go to the 1 minute. If they are different, we go onto the 5 minute. There we go. Okay, so that's step 1 and 2. Number 1, determine bias. 1 hour and the 15-minute trend. Normally, this strategy is the 4 hour and the 1 hour, but I've just basically took it down so it's the 1 hour and the 15-minute, if that makes sense. It's basically the same thing, but just on a lower time frame. I'm pretty sure the 4 hour and the 1 hour one is more reliable, but I think if I master this strategy, it's gonna be a lot better for me personally. So yeah, determine bias, 1 hour and the 15-minute trend. If the 1 hour and the 15-minute trends are in line with each other, we go on to the 1 minute. If the 1 hour and the 15-minute trend doesn't align, so the 1 hour is in an uptrend and the 15 minutes in a downtrend, then we go on to the 5 minute and wait for a break of structure. Number 3. What can I put for number 3? Oh yeah, if the 1 hour and the 15-minute trend is aligned, we can mark out confluences on the 15-minute and the 1 hour. I need to read this. If the 1 hour and the 15-minute trend is aligned, we can mark out confluences on the 15-minute and the 1 hour. If the 1 hour and the 15-minute does not align, we only mark out confluences on the 1 hour. There we go. Am I recording? I hope I am. Yep, I am. Alright, we're good. If I wasn't recording, I would have been pissed. Alright, yeah, so if the 1 hour and the 15-minute trend is aligned, we can mark out confluences on the 15-minute and the 1 hour. If the 1 hour and the 15-minute does not align, we can only mark out confluences on the 1 hour. So it's pretty self-explanatory. If you guys have watched TJR, or his trading transformation, you'll know what the strategy is anyway, basically. So we mark out highs on no matter what if the trends are aligned. Actually, let me write that down. Not you. What's that? Let's be a bit more. How can I say it? I mean, there's not really any need for that. Mark out liquidity levels no matter what the trends are. So basically just highs and lows. I just wanted to make it sound a bit more fancy. So even if the 15-minute and the 1 hour trends are not aligned, you still mark out your highs and lows on both of them. Doesn't matter. But confluences, they have to be aligned for you to mark out confluences on the 15-minute, basically. And then yeah, so what else is there? So we've marked out our high time frame key levels, basically. So what do? We wait for one of our high time frame key levels to be hit. There we go. Depending on our bias, we either go onto the 1 minute or the 5 minute and wait for a break of structure. Depending on our bias, we either go onto the 1 minute or the 5 minute and wait for a break of structure. So what we do is we look at the trend. Once we looked at the trend and we've determined our bias, we wait for one of the key levels to be hit. So that could be a 1 hour fair value gap, 1 hour equilibrium, 1 hour order block, breaker block. Personally, I don't really want to use order blocks and breaker blocks because I don't know, I feel like they're just everywhere. It kind of mixes it up. But for me personally, the best is obviously highs and lows, fair value gaps, and equilibrium. Those you could still use order blocks and breaker blocks. You'll probably see me using it sometimes as well, but I just don't want to use it all the time, basically, because I just feel like they're everywhere, and yeah, it kind of messes it up sometimes. So yeah, my favorites are equilibrium, fair value gap, and obviously highs and lows. If you're not marking out highs and lows, you're basically doing nothing. Depending on our bias, we either go into the 1 minute or the 5 minute and wait for a breaker structure. So if the 1 hour and the 15 minute are both in an uptrend or both in a downtrend, so they're both aligned, we go onto the 1 minute. If the 15 minute is in an uptrend and the 1 hour is in a downtrend, we go onto the 5 minute and wait for a breaker structure. I think I've explained that pretty well, but yeah, hopefully you guys understand. Now, once we get the low time frame break of structure, we wait for one of our confluences to be formed and filled. So let's just put it here. So that could be an order block, breaker block, equilibrium, order block, breaker block, equilibrium, fair value gap, and what else? Is there really anything else? I feel like I am missing one, but Yeah, you guys get the point. Let's just put etc. Wait, that looks kind of thing. Let me do that. I think that looked like a confluence on its own. Yep, there we go. Yep. So once we get the low time frame bias, no, one. I just bugged out. Once we get the low time frame breaker structure, we wait for one of our confluences to be formed and filled. Order block, breaker block, equilibrium, and fair value gap. Now, let's just run over this. I'm pretty sure I haven't missed anything, but yeah, this is my first time teaching. Or I'm not really teaching, like, because I'm not profitable, but this is my first time basically kind of explaining fully what I do. So, determine bias. How do we determine bias? We look at the 1 hour and the 15-minute trend. If the 1 hour and the 15-minute trends are the same, we go to the 1 minute. If they are different, we go on to the 5 minute. If the 1 hour and the 15-minute trend is aligned, we can mark out confluences on the 15-minute and the 1 hour. If the 1 hour and the 15-minute does not align, we only mark out confluences on the 1 hour. Mark out liquidity levels no matter what the trends are, highs and lows. So, you mark out liquidity levels on the 15-minute and the 1 hour no matter what the trend is. It doesn't matter. That only goes for confluences. Wait for one of our high time frame key levels to be hit. So we wait for the key levels that we mark out. So as soon as you open, I'm going to show you guys the example. I'll get into that later. So we wait for one of our high time frame key levels to be hit. Once they got hit, depending on our bias, we either go onto the 1 minute or the 5 minute and wait for a breaker structure. This is after our high time frame key level gets hit. Your high time frame key level will get hit, especially if you are using this strategy, but do not force a trade if your high time frame key level does not get hit. TJR said the same exact thing, and I'm telling you guys, don't force it. If you're forcing it, you're basically you're not following your strategy. You need to follow your strategy. Once we get the low time frame break of structure, we wait for one of our confluences to be formed and filled. Order block, breaker block, equilibrium, fair value gap. I do that in all my trade recaps. Yeah, so I'm pretty sure that's it. I don't think I've missed anything. You guys can take a picture if you really... This is my strategy right now that I'm unprofitable with. If you guys want to take a picture of it, you can. And, you know, because I think it's going to work. Like, TJR has already made a video on this strategy, just not this low time frame version. I remember when he posted that, I thought it was only for the 4 hour and the 1 hour. And then he made another video talking about how his strategy is universal. You could do this strategy swing trading as well. You could use the weekly, daily, and the 4 hour, for example. Your 4 hour on that strategy will be the 5 minute. Your daily would be the hourly, and your weekly would be the 4 hourly. You could do whatever you want with it. You could go lower, higher, even on the 1 second. You could try it if you want to. If you're a fucking scalper, I don't know. If you're a scalper, you're a psycho. Though I don't know how guys do that shit, but yeah. So let's get into it. So today, as I said, there's not really a good example, but I am still going to look. How do I move this shit, bro? Do I have to like... Oh, there we go. Alright, so this was today. Our bias today was correct. As you can see, we fucking... Look, I even marked out this high. And you guys can see it got swept after London session. And price went really, really down during New York session. But coming into session open, our bias was bullish. Why were we bullish? Because the 1 hour was in an uptrend. Oh yeah, I forgot to write that down, shit. See, look, as soon as I start showing it, I will remember something that I have forgotten. Okay, so determine bias 1 hour and the 15-minute trend. The 1 hour trend is always your bias. So if the 1 hour is bullish, we're in an uptrend. If the 1 hour is bearish, we're in a... Well, wait, I said that wrong. If the 1 hour is bullish, our bias is bullish. If the 1 hour is bearish, our bias is bearish. So if the 1 hour is in an uptrend, our bias is bullish. If the 1 hour is in a downtrend, our bias is bearish. Simple. Alright, so this is the candle at 8. So before market opened, there wasn't any of this. It was just this. As you guys can see, we are in an uptrend. We've pushed above this high, pushed above this high, and we didn't close below the most recent low. So we were in an uptrend. But I marked, because we're in a uptrend, I marked out the lows. I did delete them afterwards because after this 1 hour candle closed, we basically we broke structure to the downside, so my bias did change. So this was Asian session lows, and then these were just some other lows. I'm pretty sure this was New York session lows as well, yeah, but I just think I didn't mark it. So the 1 hour uptrend, the 15-minute before market opened, downtrend. So what did I do? I went on to the 5-minute and waited for a break of structure. Now here we do get the break of structure with this candle. This candle, we got the break of structure. Now you're probably saying, Ahmed, you could have gone longs. No, why can I not go long? Because on the 1 hour, that candle was at 9. On the 1 hour, we broke structure to the downside. This candle starts at 8, finishes at 9. It's a 1 hour candle. We broke structure to the downside with that candle, so my bias switched and now I was bearish. And then what do we do on the 15-minute? The 15-minute was also in a downtrend. So as soon as my bias switches, I delete this, delete all my lows, and then I marked out the highs. This could have actually been a really good trade, but it's just the market did move a bit shit today as well. Like look at that liquidity sweep, and then price just went straight down. But yeah, so if I did enter a trade today, so look, the 15 minutes in a downtrend now, the 1 hour is also in a downtrend now, so I could mark out my 15-minute confluences as well as the 1 hour confluences. So look, we had equilibrium, which is what I would have entered off if I did. Because our biases are both aligned, we can go on to the 1 minute. We go on to the 1 minute, we see that equilibrium got hit. We wait for a break of structure, which we get right here with this candle. Once we get that break of structure, we form this fair value gap. Bro, I hate turning off the magnet because I always turn it back on, but it is what it is. We form that fair value gap on the 1 minute. We touch it, we close below it, out of it. We put our entry there. I didn't take this trade, by the way. I'm just showing what you could have took. Your first take profit could have been at this low, this low. There's also a fair value gap there, so it would have probably been that one. And your first take profit would have been a 1 to 1.77. That's, I mean, you could have even just left it like this, but obviously no one's going to do that. I would have targeted down here at these lows, and I would have put my first take profit there. So once your first take profit got hit, you would move your stop loss to break even, and no matter what, you would be making money today. But yeah, this is not a very good example of it, but I was just showing today, just so, did I remove the writing? I did remove all drawings. Oh, fuck. Oh, wait, I could think of that. Replay. Oh, that just, oh, there we go. Wait, I need to make that a bit smaller, bro. Actually, no, let's just keep it like that. Let me try to find a good example. So I'm gonna cut the video here, obviously. Let me try to find a good example, and then I would come back into the video. Alright guys, I've found an example. Funny enough, this is actually yesterday, but I can't trade on Monday and Wednesday because I work my work starts in the morning at 9 and I have to leave around 8:30 from my house to get there on time. But soon enough, I think that is changing because I spoke to my manager. I'm gonna be able to get sent to a different store and yeah, change my shift times. I think they're gonna be from like 1 to 11 or something. So I will be able to trade in the morning. But yeah, let's just get into the thing straight away. So now it is a bit annoying looking at this now because knowing that I could have hit a really good trade. If if I was able to trade yesterday. This is why it is so important for me. I have to change my shift times because of stuff like this. So we go on to the, let me just delete this for now. So we mark out 8 to 9. Oh yeah, I also forgot to mention, wait, I'll show it later on because it's part of the thing anyway. I gave it a quick look before I thinged it, just to see if it was a good example. But yeah, so the 1 hour, we are in a downtrend. We're in a downtrend, so we mark out our highs. So this is a 1 hour high. This is Asian session high, and that should be enough. Prices probably won't go all the way up there, which it hasn't. And then we go on to the 15 minutes. So the 1 hour is in a downtrend. Our bias is bearish. We don't care about the 15-minute trend for bias. Whatever our highest time frame trend is, that is our bias. Is my voice on? Yep, it is. Alright. Okay, now we go on to the 15-minute. On the 15-minute, what do we have? We have this high. We have this high. And yeah, that's about it. And the 15-minute is also in a downtrend. So when we do hit one of our key levels, we will be going on to the 1 minute. So what I like to do is, until one of the key levels get hit, I like to stay on the 15-minute, because the 15-minute does create confluences during the session as well. So which is how we would have taken a trade here. So it's been 15 minutes into market open. Actually, no, that candle started that thing. So half an hour into market open, we create a swing high and a swing low. What do? We can mark out equilibrium from this high to this low. What does price do? Comes up here. We don't count this one because that touched it when the low was not created. High to low, we come up, we touch equilibrium on the 15-minute. Because the 1 hour and the 15-minute trend is aligned, we go onto the 1 minute. There we go. Once we are in the 1 minute, now this is what I was going to say. When we go into the 1 minute and the 5 minute, when we go onto our low time frames, basically, we can use inverse fair value gaps as well. So it doesn't have to break structure. It can create an inverse fair value gap as well. So here, we came up, we touched equilibrium, we created this fair value gap as well. What does this candle do? Comes down, inverses it. Now, what can we look for after? We can look for equilibrium. Does it get hit from this high to this low? Nope, it doesn't. So we still have to wait. We haven't created any confluences. But we have broken structure to the downside with this candle. What's our move down before that break of structure? Right here. And we didn't end up touching it as well. So what else can we mark out? We created a high and a low. We could put it like this. So look, high, low. What does this candle do? Pushes up into equilibrium. What does this do? Comes down out of the 50% range. So we could put our entry there. And then if you want to make the most out of it, you can put your stop loss here above the high that created the thing, and it would have worked amazingly. And then you could have put your first take profit at these lows down here, and you could have pretty much made more money than your whole bloodline has ever made in their life in about 6 hours, which is probably 1 to 22. If you're putting a grand, you're getting 22 grand back. But yeah, and yeah, guys, this is the strategy. I don't really know what else to explain, just because, like, you know, I'm not used to this. Trade recaps were fine for me, but I guess this is something new as well. But yeah, realistically, where would I have put my take profit? Let's check. So on the hourly, we were here. We had probably this low because it's like a really strong drawn liquidity. What time is it? Oh, this is previous day London session lows. yeah, definitely. We would have 100% put our last take profit there. What would the R on that be? Yeah, so basically we would have perfectly a 1 to 5. If you want to be safer, you can obviously move your stop loss up to these highs, but that just depends on feeling. But if you did the strategy and followed everything correctly, in how many minutes is that? 1, 2, 3, 4. In 4 minutes, you would have hit 40p. This is why I prefer this strategy over the 5 minute and the 5 minute, 1 hour, 4 hour, because this one is just it's perfect for me. I think if I master this, it's gonna be really really good for me. I think mastering this is a lot better than mastering the 4 hour, 1 hour and the thing, because I feel like this you move a lot quicker. This is definitely harder than the 1 hour, 4 hour, 5 minute, but you know, yeah, like I think this strategy is gonna turn me profitable. I'm gonna stick to this. You could have used this strategy on Nasdaq today as well. I did check. Nasdaq, yeah. So we swept out lows. Go on to the 1 minute. I'm not gonna show you guys the whole trend and everything, but yeah. So we broke structure to the upside. We created this fair value gap. We came down, touched it, got buying power out of it. We put our stop loss below the candle of the fair value gap, and we put a take profit up at these highs here. So yeah, you could have used this on Nasdaq London session this morning as well, but we don't trade Nasdaq London session anymore. That's done. Yeah, the switch I kept doing between Nasdaq and Forex got me fucked up, man. I wish I stuck to Forex from the beginning. I could have, especially using the strategy, man. I would have improved so quickly. But yeah, I don't really know what else to say. This is probably my longest video on my channel so far. But yeah, and also guys, my friend, he's been doing trading for 3 months now, 2 months, 3 months now. I'm not really too sure. Maybe less, maybe more. But yeah, I kind of motivated him to start it. Like, he kind of saw what I was talking about, because I was telling him like the amount of money you can make with it, the way your psychology just fixes up. Because you know, whoever trades, your psychology is nothing is gonna fuck with your brain basically, because you're putting money on the line every morning, knowing you can lose it. So I was basically explaining to him how, you know, I've made 10% this month. If I had 100k funded, that would have been 10 grand, and I keep 80%, that's 8 grand. And then I think he just got a bit hyped up, so he started it as well. And I can't lie, I'm happy to have someone do it with me. I think doing it with a friend obviously is a lot better, because you explain each other stuff. So yeah, he's got a channel now as well. I think he's posted some things. He's basically back testing, improving basically on using the strategy and everything, so he feels a lot more confident. And yeah, I haven't done any backtesting videos, but if you guys want to see that, then you could, you know, write in the comments. You can even ask that, Ahmed, can you post a video on what are liquidity sweeps, what are fair value gaps, what are order blocks, what are breaker blocks? I'll show you guys everything you guys want to know. I'll make a video on it. But you know, you can just go and watch TJR's videos. But if you guys like this video, like the way I explained it, and you guys find it good the way I explained it, you guys can comment down below, you know, if you guys want to learn anything, and yeah, I'll make a video on it. But yeah guys, this is my longest video, so I am pretty happy how I got through this. But when you're making videos, time actually flies. I don't know, I think it's been more than half an hour, but yeah, I'll see you guys next time I trade. I'm pretty sure I should be trading. Yeah, there's nothing tomorrow that's stopping us from trading, so I will be trading tomorrow. And yeah, I might do like a little live trading tomorrow, so just put on my you know, streaming software on, like, as I start trading. I feel like that would be kind of cool. I might do that. But yeah guys, I will see you lot next time I trade. Take care.